let me welcome you all today. Obviously, family offices and LPs in the recent time have become hugely important when it comes down to the startup and scale up, but also the traditional asset classes. So my name is Samir Ceric. I run my family office, mostly commodities and real estate based, but I also invest privately in the tech venture, startup scale-ups, in particular those in the fintech, sports tech, AI, climate tech, and med tech, with the sort of sports vertical as the focus. I have two esteemed panelists with me today, so rather than doing them injustice, I'm going to ask them to introduce themselves, and then we're going to ask with a series of questions and hopefully have some time for you guys to have questions to ask the panelists. Thank you. Over to you.
Hi, everyone. My name is Ariella Young. I work at a fund of funds called Allocator One. We invest in emerging fund managers globally.
Thank you.
Hi, everyone. My name is Patrick Dumas. I work with a number of family offices and a number of venture capital-backed firms, mostly in real estate and edtech, and a little bit of oil and gas as well.
Okay, so we have 4 different sections of today's panel, and we also have Ariella, who is not actually anymore with the family office, so she's in a fund of funds. So we're going to try to sort of bring a diverse experience what's happening really in the investment ecosystem today. But the first division is very much about investment strategies and differentiation. So I'm going to start with Patrick in relation to the first question. So Patrick, how do your approaches to asset allocation different from institutional LPs, and what drives those distinctions?
Yeah, I mean, I think that family offices in general in this volatile world that we're currently in are looking to make investments alongside people they know, people they trust, and in industries that they're comfortable with. I think raising capital from family offices historically, if you go back 4 or 5 years, was much easier. Whereas now, there's a lot more caution with higher interest rate environment, and obviously a lot of volatility coming from the macro geopolitical landscape at the moment in the US, etc. So I think family offices are looking to invest into sectors that they know, they understand, and also alongside people that they trust. So I think having that personal connection with the family office is always very important. And so, for example, there's an edtech business that I'm involved with, which does early learning, and there's a guy in the space who's sort of 25 years in the education space, and he was very close to the CIO of a family office, and that family office invested just purely because they had that trust with that the person who had such deep sector experience.
Ariella, from your viewpoint.
Now that I'm working at a fund of funds, so my viewpoint is going to be slightly different. So at a fund of funds, we are not so much constrained by bureaucratic decision-making processes, and we're also not tied to legacy portfolios, so we can make decisions quite quickly and based on our thesis, which is investing in Fund 1 and Fund 2 globally, fund managers that have been overlooked and undervalued.
So just to add to Sir Patrick's point, family offices, I was recently doing a little keynote on the important role they're playing today in the sort of investment ecosystem. I think the VCs are becoming more and more reliant on the money from family offices as their kind of new form of LPs. As somebody who's in the sports industry, we've also seen a huge emergence of sportsmen and women, the elite athletes, coming into the space, setting up their own family offices, not only post their career, but during their career. We've seen with the Paris 2024 Olympics, the amount of investments they made, the LeBron Jameses and the Currys of the world. But one important thing I think that differentiates institutional LPs to the private LPs in terms of family offices is Patrick's points of domain expertise. Family offices tend to go down the routes and the industries they're familiar with. And I think that makes a huge value add versus just deploying the capital and deploying the money. And I think we're going to see more and more of that. And this is where the sort of the whole ecosystem is changing, because many would still argue that the VC sort of model is somewhat broken. It needs a lot more, I think, technology-driven being injected in that. And I think that's where the opportunity is to really scope this out much, much wider. Now,
and I think also, you know, with family offices, because they generally come from an entrepreneurial background, you know, they understand what it's like to build a business, whereas a lot of VCs, you know, are financial people, but they actually don't always have that, you know, I've built a business mentality, and they understand the difficulties of that. And so therefore, I think, you know, as startups, often to bring in VCs can sound very attractive, but on the flip side, it can also come with a lot of, you know, a lot of pain, I think, for startup founders. Whereas I think bringing in family offices as investors, they become more like partners. They understand the pains, the problems, the cash flow, etc. And I think that's why family offices can be very, you know, powerful investors for startups, especially if they have the industry expertise and they can bring those strategic benefits and know-how.
Excellent. Ariella, with the growing interest in alternative assets, how are you evaluating opportunities in niche markets?
So we only invest in specialized fund managers, so they have to be an expert at one vertical only. So given the current geopolitical environment, it doesn't really affect our investment thesis much, but I think we have a better filter, and we also still look at markets that's been, you know, overlooked and undervalued, fund managers in Central Europe, Eastern Europe, and other parts of the world, rather than just focusing on the US markets.
And for you, Patrick? So with the growing interest in alternative assets, how are you evaluating these opportunities in the niche markets?
Yeah. Again, I think, you know, the education space, which is, you know, a focus for me, is, you know, something I think, again, coming back to family offices where, you know, there's a lot of focus on impact. And, you know, I think if, you know, there's that impact coupled with the financial return, you know, I think that's a, you know, of broad interest to a lot of family offices, you know, in this current environment. So yeah, I mean, I think the education space is a very interesting one, where people can get the benefit of trying to support, you know, the future generations through education, but also at the same time, you know, potentially making a good financial return.
And how does geopolitics affecting both of your businesses and business models? I was recently at the conference, Alternative Investment Conference at Four Seasons early on this week. So we had Kevin McCarthy, the former Speaker of House of Representatives, who served pretty much under all the presidents, including Trump's first mandate. And there is a huge issue both in the US and in the UK. I think we've lost by 11,600 millionaires in the last few months, whereas there's been 11,000 plus families from the US moving to the UK. So how's that, you know, geopolitical sort of, I guess, issues and challenges affecting what you're doing?
Families moving outside UK for tax reasons doesn't really impact on us, because most of our LPs, we are backed by family offices in Europe, US, and Asia, so it doesn't really impact. But what actually I personally look at differently is the defense startups, or businesses that focus on defense, and I think that's just going to be more growing market size. So I'm more always looking for interest in fund managers that are focusing on this and they have a specific edge and yeah, they understand.
And what geographically, is it mostly the US or globally?
Globally, in Europe, I think there's so many interesting fund managers and specialize in this, and so yeah.
And
globally.
if you looking at defense, are you also looking at the space?
Yes.
Yes.
Yeah.
And for you, Patrick?
Yes, I think there's geopolitics is significantly affecting some of the businesses that I'm involved with. So for example, Trump getting rid of the Department of Education in the US, causes a lot of uncertainty, in the education market, and obviously a lot of what Trump's doing with tariffs and other things like that are creating a lot of uncertainty for a lot of businesses as well. So, for example, there's a partner that we currently have, which is a very large offline provider to the education space in the US, and most of what they produce is from China. So that's obviously going to cause some significant problem with increased costs as they import a lot of goods from China. So yeah, I mean I think the geopolitical landscape at the moment is creating a lot of problems for a lot of sectors, and I think one of the biggest issues is uncertainty. But funnily enough, I was actually speaking to someone yesterday who said that a lot of what Trump's doing, people sort of understand. It can be done in a sort of unpredictable way, but they understand essentially what he's trying to achieve. But obviously with AI, that's probably the thing which is going to create the most uncertainty for all sectors over the next few years, because I'm not sure really that most people know quite how that's going to affect each industry. So I think geopolitics is causing uncertainty, but actually I think AI really is the big sort of elephant in the room, which is going to create a huge amount of uncertainty over the next few years. And how do you invest into that, and how do you mitigate that risk?
By the way, sir, I'm just curious to know how many family offices in the room? No.
1, 2.
Okay. 1, 2. And how many emerging fund managers in the room? Okay. I was just curious to know.
Good. So kind of looking ahead, which emerging sectors or trends are so capturing your attention at the moment? Ariella, you mentioned defense and space, but what else are you looking for or is of interest to you?
In general, we're always looking for fund managers that have a special expertise and specialize in one single vertical. Could be really anything. We invested in a fund manager that specialized only in diabetes, not just the health tech, but very, very specific. We invested in a fund manager that only focused on building things with communities. So it's just very specific. They have to be an expert. They have to have unique network and an edge. Other than that, we are openly agnostic in terms of industry.
What about you, Patrick?
Yeah, I mean, again, I think AI is, just phenomenal. The change that it's already creating. I think they say within the next year, AI is going to be better at 90% of tasks that humans currently do. So I think, AI in many ways can be cost deflationary for a lot of businesses and can actually be a massive value add and really help the bottom line. But also, on the flip side, I think a lot of businesses have to be very careful with, how AI can supplement what they currently do or replace what they currently do. So I think AI for me is the big trend, which we need to, everyone needs to be focusing on when they're making investments at the moment, because if you're in a company which is a content-based company, is that going to be worth 0 in 2 years' time? Where if AI can create all of that content for, at essentially a 0 cost. So I think it's something which people need to take very, very seriously.
I recently asked a president of IOC who also talked a lot about importance of AI across, and sports, the Olympics, with the LA Olympics coming up. How do they sort of correlate that with ESG? I think one of the biggest issue everyone talked about when Trump was sworn in for the second time was that huge investment, $500 billion to AI, without too much care how it actually impacts the sustainability and climate change and everything else, but pulling out also from the Paris Accords as well. So what's your view in that respect, and how much do your investments care about the importance of ESG?
Well, I think, again, AI and the sector which has taken up AI the quickest is actually is the education sector so far. I think 70% of the users on ChatGPT are using it for homework and homework-related things. So it's very supportive for the education industry, which can have a lot of positive impact. So yeah, I mean, I think education is one. Education obviously leads to empathy, leads to understanding the environment better and other things. So that's an indirect correlation to to ESG as well. But I'm sure with AI, there's going to be huge advancements in clean energy, and Trump is meant to be only here for another 3 years. So after he moves on, I'm sure that the US will probably take renewables pretty seriously, and obviously AI indirectly causes massive energy consumption, and because of that, renewable is going to be so important in the future. So I think there's going to be a lot of investment, and actually it's probably quite an interesting time to invest in that as these prices are depreciated due to Trump's negativity towards it.
Ariella, in terms of your investment thesis, how important is that component when you're looking to invest and deploy your funds? I mean, I was here early on a prop tech panel which talked about sort of 2050, every single building in this country will have to be net zero. Obviously hugely challenging, but also a huge opportunity for that whole space to explode, because with United Nations 2030, 24 mandates, everyone's got to be following in that sort of direction.
Good question, Samir, but it's not in our thesis. I mean, we are more, it's nice to have, but impact and sustainability is not in our mandate, but it's nice to have.
Okay, so it's just a bonus rather than anything else. Now, you mentioned that particular sort of focus of the fund managers when it comes down to what you're looking for. What is your standard way of identifying those investment opportunities? Just talk us through the process, and are you open to others approaching you and sort of selling what they're doing? Just tell us a bit more on that.
Well, the process starts on our website, so anyone wants to consider us as a potential LP, we anchor, but they need to submit the application online. Then we have a strict process. We look at the fund managers' previous investments as an angel investors, and also what do they bring uniquely than anyone else who want to specialize in that industry. That could be their network or the investments that they made in the past. It could be anything, but it has to give them a unique, unfair advantage that anyone else couldn't have that advantage.
Yeah, and what sets you apart as a fund of funds in relation to those around, both in both directions?
That's a really good question. I think speed. Our decision-making process is pretty fast. We look at your application. If we think that there might be a fit, we start having interview with you, several calls, we do background check, and the whole process is pretty fast. And what makes us unique is, I think there are so many things, but if I have to say 3 things, we help you with introducing you with other potential family offices and LPs could be interested. We help your portfolio companies. Because we invested globally, we have fund managers in the US, India, all over the world. So if they need help or with their, whether that is, increasing their revenue or bringing their costs down or hiring new people, we have the ecosystem to help them globally. So that's the second thing that we bring to the table. And the third one is, I think what makes us unique, our founders, they have been an entrepreneur, and they understand what you go through and the ecosystem, and they there to help you because we genuinely just there, and we organize every 2 to 3 months events where we put together all our fund managers together. Everyone talks about what they struggle, what they need help with, and we support them.
Excellent. Patrick, as family offices are moving more towards direct investment, startups and scale-ups, what do you think the future for VCs holds as we're going to see more and more of those direct investments?
Yeah, I mean, I think a lot of family offices are, looking for direct investments, but on the flip side, there's a number of family offices that I talk to who actually like going down the fund route because, again, if they want to get exposure to a sector and they don't know that sector well enough, they prefer to go to managers who have deep expertise and they can incrementally add capital there over time. So I think it really depends. Again, I think it goes back to what we were saying earlier. If they have industry expertise or someone within their family office has deep industry expertise and contacts, I think they're happy to make directs and they like the control of that direct investment. But I think often family offices are looking to diversify. That's the nature of the family office, and I think so there's always going to be room for good managers so that they can use that to diversify and find sector expertise and track record through other managers, and also get diversification, which is obviously important, especially if they're investing earlier stage.
Ariella, we heard Patrick talking about the importance of AI, and it is pretty much in every sort of segment of our lives. For you guys, as a fund of funds, where do you see deployment of AI that will help you in both identifying opportunities and also being able to automate lots of the things that you've had to do in a kind of human kind way?
So, although, for us, in terms of fund selection and looking at, everyone's deck, we actually don't use AI. We go through everyone's fund deck. We have to still do in-person interviews. We still have to do background checks, talk to other people who work with them in the past or things like that. So in that sense, our manager selection process, it doesn't really impact, and I wish it did. So it would have, we would have saved lots of time. In terms of what we invest, I think now there is no industry without AI aspect. Everything has AI. Yeah.
Let's move to the final section that I'd like, as we've got the full room. I'm actually more interested in the Q&A part and get lots of questions from the audience. But just tell us, let's start wrapping up, trends. I'm very interested to hear from you, what you're predicting in the next 5 to 10 years, both in terms of the investment opportunity, the geopolitics. Everyone talks about Trump being all about peace, winning the Peace Nobel Prize. That's what he's after. And I think it's evident that the impact he has on the markets, the impact he has on the policy creation around the world, we can't escape. And the investment world isn't immune to that either. So looking ahead, just talk us through from both different angles what you see as the future trends.
I think personalized healthcare, defense, and this is going to, in my opinion, healthcare, but making it more personalized, including, it could be your medicine or whatever it is, that's going to be important. But cybersecurity, that's also, I think, is going to be an important part.
Yeah. I think, as Jeff Bezos says, I quite like to focus on things which I know are not going to change, because to try and guess what's going to happen in the future with AI and things like that, yes, it's interesting to have some exposure to that. But for me, I think real estate, Oil and gas, obviously that's not very good for ESG, but oil and gas, real estate, I think for me are two sectors which, in 10 years' time are still going to be, very valuable if you buy them, with the right thesis. So yeah, I think there's some interesting investments to be made in AI, but again, there's a lot of risk alongside that. Valuations are very elevated already in AI. So yeah, I think sort of from a personal basis, I like to have a significant portion in real estate and oil and gas for the foreseeable future.
And do you think also that quantum computing, which is kind of the most recent addition to that all blockchain AI bandwagon, is also gaining a momentum?
Yeah, I think quantum computing, is puts huge amounts of things at risk. Bitcoin and crypto, and will quantum be able to crack those codes and then make them essentially worthless? That's obviously the whole basis of cryptography. That those codes can't be broken, but quantum probably will be able to. So yeah, I think that will be absolutely make huge changes to medicine and healthcare and other sectors. But again, with that, I'd still like to go back to things that I know in 10 years' time people are still going to need to store stuff. They're still going to need to eat. They're still going to need to live in places. They're still going to need energy. And quantum and AI will probably accelerate the move to ESG. But again, as that's happening, there's going to be huge energy consumption increases, which again means that oil and gas isn't going away in the next 5 to 10 years, the demand for that. So again, that's why I like real estate and oil and gas with a little bit of exposure to some tech.
Excellent. Just to sort of round up, I'm being told off. Let's get, just to everyone's point, I think from my viewpoint, it's really climate tech and med tech or health tech in general that I'm very excited about. I think that's going to be a huge impact on the way we live, we consume things, and I'm looking forward to seeing that. So let's get a few questions as we've got 5 minutes to go at the back there.
Hi, I'm Amanda. I'm a two-time exited founder. I work with Antler and also pulling together a fund in health tech. So curious to know, I know that the Boston biotech movement is all operator-turned fund managers, right? But obviously the traditional structures, allocation structures are still in place. I just wanted to see what your sentiments were in the whole sort of, the founders who are now, fund managers. There's no clear track record per se, but it is shifting there. So I'd love to hear your thoughts.
You want to go ahead?
No, I think
But I'm not sure about the question. What is the question?
So basically the operator turning into the fund managers, but haven't been one before. I think that's something that the US is seeing a lot of. Not yet here, I don't think. So your thoughts on that?
I think there's also a lot of people in Europe and globally that used to be an operator now becoming fund manager. We invested in Sarah Drinkwater's fund. She was an operator before. She worked at Google and built a community. She was #1 employee at Google Map. So yeah, I think, look, it's all about finding the alpha, and it's always difficult for emerging fund manager, first-time fund managers to raise funding because they don't have the track record. But I think you have to have an angel portfolio at, something to show. You may not invest as an investor, but whether through a SPV or as an angel investor, if you have some successful investments, I don't see why you wouldn't be able to get funding as a first-time fund manager.
And I think just to add to just to add to that, so Parallel is the first-time founders and also elite athletes that go into actual entrepreneurial world and the world of banking. It's all about people, and I think ultimately to Ariella's point, people invest in people and finding somebody who's got a vision. Not all of us have got the track record, the experience, so sometimes you've got to start from somewhere, and I think the benefit of the operators, they really understand the world they've got into.
Exactly, I completely agree. I think, as I mentioned earlier, I think the operator turning into fund manager is so much more attractive for the portfolio companies because they're bringing someone in who actually knows what it's like to build a business and, and the trials and tribulations that comes with. So I think it's very, very powerful. I'd recommend a lot of the portfolio companies that I advise to look for those types of investors because they'll have a much better journey with them.
Yeah, one there.
Thank you. Question to Patrick mainly on the geopolitical comment you made earlier. Considering the reference to the Trump administration decisions, I mean, whether you look at it as and in 3 years we're going to go back on track, or whether you think it's a long-term movement, even across Europe, wouldn't you say that the ESG, it's kind of proved the ESG fragility maybe in the ecosystem, in the investment ecosystem instead of reinforcing it? So wouldn't you see a move away from ESG, DI, investments because they've been proved to be so fragile?
No, I think actually, as I said earlier, I think it actually provides a really good opportunity to get into them because, long term, I think there's going to be a huge amount of investment in ESG. It's just the long term trend, and again, with renewable energy and things like that, the energy consumption is going to be is growing so enormously, and that's just going to continue more and more and more with technology and AI and huge consumption there. So yeah, I think that it's actually renewable energy is a phenomenal thing to invest in now but with a longer term view. I think you'll have some volatility in the short term with the Trump administration. Yeah.
I think I'm seeing, and one more question there, I'm seeing a huge trend in the sports industry. I think you've got the infrastructure play, which is the stadiums. You've got, of course, the emissions in terms of mobility, but you've also got energy consumption. I think they've done lots of studies how the fans could actually power the entire stadium for the entire match by just switching from 2,000 burgers to 2,000 chicken burgers, and that actually allows you that. And then, of course, you've got the importance of what's happening in that wider spectrum of things. So I think
even better if they were vegan, I think.
Yes, well, I think food and beverage plays a huge role, and I think those running it inside the stadiums have got a lot to answer.
I have a question for Patrick. For family offices, is there any preferred stage that they like to, like stage of business?
Yeah, I think I mean it varies, but I think most family offices like investing, Series A onwards. So I think when a company has proven product market fit, they're generating revenue. Ideally, they're on track to becoming EBITDA positive. So I think a company normally which is probably 3 to 5 years into its life cycle, I see that as the main sweet spot for family offices.
Question at the back.
Thanks very much. So Ed Gemmell, I lead the Climate Party nationally, actually, and but with a couple of other hats which make it interesting. I'm also a trustee of a pension fund of about 4 billion, and we're launching or trying to put together an investment fund to fund the Climate Party actually externally. Patrick, your comment on oil and gas, and then your other comments to me, I just want to bottom it out a little bit. I mean, at the moment, clearly renewables is a great opportunity. It's exponentially growing. London Stock Exchange figures from only 2 weeks ago are suggesting that the net zero economy has been growing at 15% a year now for the last decade, and we're expecting that to accelerate as well. And you're still talking about going to oil and gas. Can you just bottom that out for me? I can't quite see the logic.
Yeah, so I think oil and gas is just purely for commercial benefit. I think I think there's still medium and long term with oil and gas is not going away. As said, because of that massive energy, renewables can't keep up. So there's still going to be long-term demand for oil and gas, over the next 15, 20 years. So I think there's still great opportunity there to make a financial return, but from obviously a climate perspective, that's not good for the climate. So that's where the ESG comes in and the renewables.
Just from a pension fund trustee bit, when we've been arguing about it, is our worry is the pendulum is going to swing very fast on oil and gas. So if you time it wrong, you suddenly lose, you lose your shirt almost overnight. Do you think that's going to happen, or do you think it's going to be a gradual fade away?
No, I don't even. I mean, I just think, again, as I keep repeating, I think the energy consumption, the speed of growth there is so phenomenal. Everyone doesn't know how to generate enough power. Nuclear and Meta's building nuclear power stations, etc. So people can't get enough power, and obviously for the moment, oil and gas is the main power supply globally. So So yes, I think that it's gonna be a long-term thing. I don't think it's going to happen overnight.
Let's continue after the session. I think one last question.
Thank you. So I'm Silva. I work for the Day, which is a closed equity and finance firm. So we invest into both direct investment, like traditional direct investment, but we also do a lot of secondary direct, where we acquire a portfolio of assets from GPs, corporate PCs, or even family offices. And oftentimes we can partner with the family offices and keep the team managing the assets on during the next holding period. So my question is on the direct investing for family offices. Do you see a trend where family offices invested directly in companies in the past few years and are now looking to divest or focus on more like fund investments or other alternative investments?
I mean, as I mentioned earlier, I think it's a bit of both. I think it really depends on their sector expertise. So I think there's always going to be demand for fund managers to allow them to diversify, but I think they're also looking to make direct investments. So I think it's a bit of both, and it depends on the sector the family, has their core know-how in.
Thank you so much. I think we're out of time. Thank you, the panelists. Thank you for the questions.
Thank you.